And on Tuesday, we had a loser open for both stocks and bonds. Bonds were down 14 basis points early, stocks down 10 points on the open. Bonds were little changed by the time the domestic session began. Yields dropped roughly 4 basis points following weaker data and an ECB inflation survey in Europe. But sellers erased those gains at the 8:20 a.m. CME open. Reprice risk on the day was low. Although trading in bonds was a bit choppy, we aren't in a worsening trend or anything like that. We got the ISM report, which showed the services economy expanded at a slower pace in May. There has been a pullback in the rate of growth in the services sector. This is due mostly to the decrease in employment and continued improvements in delivery times and capacity, which are in many ways a product of sluggish demand. The majority of respondents indicate the business conditions are currently stable. However, there are concerns relative to a slowing economy. The prices index continued to decline, which is good news for the Fed. Over the past month, the percentage of companies raising prices has fallen from 35% to 25%. Home prices rose 2% year over year, according to CoreLogic. Home prices were accelerating at 20% last year at this time, so it's a big slowdown. It looks like prices peaked in June of 2022. The top states in terms of percentage gains were Indiana and New Jersey. The losers were all concentrated in the West Coast and the mountain states. It would be hard to make a case for any other day in the past month being more boring than today. Indeed, it is the first true inside day, meaning that today's range contained inside of the previous day's range since late April. To make matters more sideways, MBS and Treasuries were both close enough to unchanged at the 3 p.m. close, as long as you're asking about 10-year yields. If there's any reason for a short end underperformance, it would have been Australia's central bank hiking rates somewhat unexpectedly. MBS at the day ended up 13 basis points, so it's a pretty good turnaround. Stocks gained 10 basis points at 99.89. That puts us into this range right here that is bordered by the red squiggly line, which is the 25-day moving average at 100.22, and then a floor at 99.845. So we have a floor close by. So we definitely want to stay up in this range so we don't fall down and have a new floor at 99 and an eighth. We also got a new post from our sponsor on a new series from ThatMakesSense.com. This is some notes from a great podcast series between Chris Williamson and Alex Hormozy. Alex Hormozy had a bunch of great points in that. And the big one in this post is the advantages of having nothing to lose, which is basically, if you say my life sucks, I have nothing going on for me, that really means you have nothing to lose. So you might as well go try anything and make it happen.